Good morning, good afternoon to everybody in our audience. Welcome to this session. Today we are talking about the affordable housing finance gap around the world. I'm Elizabeth Vivirito. It's so nice to meet you all. I'm the founder and CEO of Vivirito Consulting, and I work in strategic communications and financial inclusion. Today we are talking about housing affordability and its connection with inclusive finance. We all know in every city, in every state, in every part of the world, housing affordability is a challenge, and in many markets, a growing challenge for people and consumers around the world. By 2025, the World Bank estimates that 1.6 billion people are expected to be affected by the global housing shortage, and that the gap between demand and supply of affordable housing finance products is huge. It's estimated at $16 trillion by McKinsey and Company. We could talk all day long about the connection for individuals between their housing and their financial security, their financial inclusion. Today, we're really going to focus our conversation on mobilizing investments into this space. So how can we really garner and gather more investments, philanthropic, public, private, to help dramatically close the housing affordability gap. So today, we know that when people don't have access to affordable, stable housing, it contributes to financial inclusion. It's also an impediment to building wealth and financial thriving. And we believe that too few organizations and funders in this space are actively working towards one of the most effective mechanisms of wealth building around the world, which is home ownership. I will also say notably gaps between female and male-headed households exist not only in the US, but globally. And there are significant gaps on race, ethnicity, and other demographics, rural, urban, age. So the purpose of today's session is to get us excited by the global opportunity to close the housing finance gap, to explore the situation across multiple continents and countries, and talk about what the constraints are and what the innovative models and opportunities are. We will be covering microfinance, traditional banking, fintech, and the role of patient capital and governmental funding. So I'm very excited to be with you as the host today. I'm going to introduce each of our speakers and then ask them to talk a little bit about what the situation is in their local market for housing finance and housing affordability. So first up, we have Jitendra Balani. He works as Global Director, Program Design, Housing Finance Systems with Habitat for Humanity's Terwilliger Center for Innovation and Shelter. He's been working with financial institutions in the private sector to scale affordable housing finance solutions and develop global advisory solutions. He also manages Habitat's Microbuild Fund, a housing finance microfinance investment vehicle dedicated to helping low-income families. So thank you, Jiten, for joining us today. As we start, can you explain a little bit about the housing situation across your country or region and why affordable housing is a challenge?
Sure. Thanks, Elizabeth. So, we are present in around 70 countries, having a global operations with the help of the Microbuild Fund. So one thing which we have seen is that in many emerging markets, housing is a process where households build incrementally or progressively as their finances allow. And 80 to 85% of the construction in emerging economies is an owner-driven construction. Their families build houses progressively depending upon their ability to mobilize the finances. And these are the typical families, whose livelihoods come from the informal economy. They lack the income proof and they lack the credit history required to be eligible for a pure play mortgage solution. So as a result, for these families, it can take up to 30 years for, to construct a fully functioning housing unit. So this is a segment that drives our work within the affordable housing finance chain.
Thank you, Jiten. And can you talk a little bit, you talked a little bit about low-income populations, particularly struggling throughout Asia. Who else is your work focused on?
Right. So I think if you look at a low-income family which is traditionally served by microfinance institutions, right? They generally have needs of home improvement in the range of home extension and minor repairs and minor improvements. Now, microfinance institutions are traditionally the best distribution channel for them. So these housing microfinance loans are typically within the range of $500 to $3,000 with shorter terms, 1 to 3 years, and compared to a mortgage, right? And within this overall low income segment, there is also a customer segment which is more a graduated customer within the microfinance segment, and they often have a need of micro mortgage solution. So with our fund, around 20% of the fund's portfolio has been also towards the micro mortgage solutions, which allow these families to expedite their incremental journey and also allow them to construct new construction or to also purchase, affordable housing units. So we are present in both the segments within the strata of the low income category.
Wonderful. Thank you. Shaheen, I'm going to turn to you now. Mohammed Shaheen Iqbal is the head of Treasury and Financial Institutions at BRAC Bank in Bangladesh. Extensive experience in the area of treasury management and relationship management. And he's in charge of foreign exchange, money market, capital market, and asset liability management. Welcome to the conversation today, Shaheen. Can you explain a little bit about what's the situation look like in Bangladesh, and why is affordable housing a challenge for you?
Thank you, Elizabeth. Thank you for inviting me. I think in Bangladesh, like housing is a big challenge. I have seen a study, though the study is dated, like in 2015 study of IFC. It has shown that like debt to mortgage debt is as percentage of GDP is only 3.23%. So I don't think it has changed much. So around 3% mortgage debt as percentage of GDP, so pretty low. And also like housing requirement versus the supply is pretty low. We have seen that 8.5 million shortage in 2022. So 2021 deficit is 8.5 million in Bangladesh. So supply is roughly 50,000 to 100,000 in a year. So you can see big gap. And also the financing gap in the study, like is in 2015, 4 years financing gap was 8 billion US dollar. So in general, there is a big gap in terms of availability and supply. And as a percentage of total financing as housing by banks and financial institutions here is out of the total portfolio 7%. So that is also not very significant. So altogether, like housing finance requirement versus demand there is a big gap, and also the current condition is appealing. Like if you can see, like 44% in urban areas, in residing in a temporary built houses. So you can see, and 35% living in slum. So you can see that the kind of deficit and the kind of requirement that the market has. So I think gradually market is trying to cater this requirement, but I think there is a big gap, which really shows that the kind of financing requirement this segment is required.
Thank you, Shaheen. Not unlike situations that we see in many markets around the world, that demand for housing just so much exceeding our current stock today. Thank you. We'll go to Dana Chestnut. Dana is the Chief Lending Officer of Community Housing Capital, based just outside Atlanta, Georgia. Executive leader of sales, marketing, and business development, with more than 25 years of development and finance experience in the affordable housing sector, and been responsible for financing or underwriting over $5 billion of development projects in his 22 years in the sector. Welcome, Dana.
Good morning.
Glad to have you here. Can you talk a little bit about what's the situation like here in the U.S.? Where are we struggling? Why is it so hard to close this gap?
Yeah, I mean, you really nailed it on the head in terms of what we've heard so far this morning and the shortage of affordable housing. particularly over the last few years with the COVID-19 pandemic, record high inflation, significant job losses, and rising rent prices have all significantly impacted the housing landscape. Between 2019 and 2021, the shortage of homes available on the affordable sector has increased by more than 500,000 units just in that short period of time, increasing from a shortage prior to that of 6.8 million households throughout the country to where we lie today at 7.3 million unit gap in terms of affordable housing that might be available. And that's really important when we think about those that are in the deeply affordable sector at 30% of AMI or below. Those individuals are also challenged by folks that might be in the 60% to 80% AMI level, all competing for the same units. And so oftentimes those that are left out are those very low income threshold members who are in desperate need of housing. And so while we focus a lot on that middle to workforce housing sector, there's a real need to focus a bit more into the deeper subsidized housing units. That's where the biggest need is, and that landscape continues to grow every single year.
That's absolutely right. And just to translate for our global audiences, in the United States, we talk about AMI, which is average median income for a region. So we're talking about, Dana mentioned 30% of AMI, and then really looking at projects, particularly, around that up to that 80% threshold as well. Dana, the community housing capital model is very interesting because it's a lender to nonprofit organizations that are doing housing development in the United States. Can you talk a little bit more about that model, track record, and then why you saw a need in particular for your Black, Indigenous, and People of Color Fund in the work that you're doing?
Yeah, absolutely. Community housing capital, as you indicated, primarily focuses on nonprofit affordable housing developers throughout the country, with many of them oftentimes providing a multitude of services to those communities. Could be financial education, first-time home buyer classes, so just general education about getting in a good financial strength to prepare themselves at some point for home ownership. What we like to think through at Community Housing Capital is that we have the ability to really be a part of the entire spectrum along the way of affordable housing. And as you guys understand this piece in this space, it can take many years to conceive and actually develop a unit of affordable housing. We like to get in really early in the process, making early dollars available to small nonprofit developers such as unsecured pre-development loans that they can use to really model out projects that have been conceived really early on, oftentimes prior to any land takedowns. And so we're willing to get in and take that really early risk on those small developers. One of the reasons we really thought through the need for a BIPOC product, which is Black, Indigenous, People of Color, is that we know that within this country, there have been long-term institutional racism that people of color have faced in trying to get fair access to capital. I saw that firsthand in my more than 20 years of working for large commercial banks in this space. And so I wanted to make sure that once I came into a team like Community Housing Capital, which is a small CDFI, that we have an opportunity to do something different. And so we set out to build out a product, the BIPOC product, exclusively for developers of color, so that we can provide oftentimes below market rate capital, at minimum market rate capital, so that they can have full access and compete against their for-profit partners out there in the space. But this fund also provides early access for land takedowns at a very high leverage. We can do acquisition of existing affordable housing buildings. And what's most important for us is that we also can provide construction-related capital for sale housing. And as we talked about earlier, we believe that's one of the primary ways to really bridge the wealth gap, is to create home ownership within this country. And so we have a really strong focus on providing housing, construction-related financing for sale housing throughout the country.
Thank you, Dana. Yeah, very important. Such an interesting innovation to really target developers of color, because they're ones working in and with communities so closely that need housing the most. I know we're going to get questions from the audience about how you're funding your BIPOC fund. We're going to come back to that and any question around funding that we'll talk about with the panel. Shaheen, I wanted to go to you next, because last year BRAC Bank announced Bangladesh's first ever housing bond, which is a really interesting model to try to pull more money into this sector. 80% of people in Bangladesh live in rented properties all their lives. And this housing bond is, an ambitious goal to try to, help address and put people on the path to housing security. Can you explain the goals of that project and a bit about it, how you've structured it in Bangladesh?
Thank you again, Elizabeth. I think housing financing, as it is not in enough supply, so also banks in general, the main financier, they are having shortage of fund, mainly because they do not have a matching fund, like they do not have access to longer term fund. That's why we try to do two things. One is to develop the capital market, like issuing longer term bond, so that we can have access to longer term financing. At the same time, we can tap the underprivileged segment, like affordable segment. So usually we see that outskirts of metros and real rural areas where we can really tap those segments, where people really need to build their home. They can really convert their makeshift home to a better quality home. And also they can probably relocate their family to little rural areas or the areas where they really want to live on. So that's the one of the target. Again, this is a really deprived segment, mainly because the monthly earning for this segment is like $550 to $1,200 only. So they earn pretty less, and they really need to have this kind of access to finance, which usually they do not have. So that's why we came up with this product, so that they can really avail this loan with sufficient tenor of financing. We have seen that, like, if you really lend for a shorter tenor, their EMI goes up, and which is not affordable. That's why we are trying to extend this maturity, like we do offer 20 to 25 years maturity loan with this income bracket, so that they can really afford. And this is a good initiative. We have seen that with this initiative now, another financial institutions is coming up with this product again this year. So this is again an effort to really create market for other players as well. So demonstrating that this could be a wonderful product to support the market and creating an opportunity for the deprived segment to really finance them. In this process, like I want to highlight this one, like BRAC Bank has truly a big inclusion agenda. Like they really want to finance the SME. Like 50% of our portfolio is in SME. And this SME is really small and micro. Average loan size of those segment is less than $15,000 US. So they're really micro entrepreneurs who really borrow from BRAC Bank. And what we are trying to do with this one, really to bring them in this portfolio, like providing them the home solution through this affordable housing loan. Now they are getting an access to a business loan to run their business. At the same time, they will be getting a housing loan, affordable housing loan, to build their home. So that we can really provide close to 360-degree solution for the client, so that they can have a better livelihood going forward. That's a small effort from BRAC Bank in this slide. Thank you.
Thank you, Shaheen. Moving back to Jiten, your work throughout Asia is so ambitious, because it covers the housing crisis throughout so many countries, right? An estimated 1/3 of Asia's 2.2 billion people lives in slums and informal settlements, oftentimes with limited government ability to address it. How has microfinance, you talked a little bit already about how microfinance has helped fill some of these finance gaps, but how has Habitats for Humanity's work with the Asian Development Bank been able to kind of catalyze and scale and take a concerted effort to help MFIs address this space?
Sure. So, when we first launched the Microbuild Fund, which continues to be the only dedicated facility around the affordable housing finance within the emerging markets. So the main objective was the demonstration, basically to prove the financial viability and the social impact opportunity for housing microfinance. And within this fund, we basically give wholesale funding to microfinance institutions, and then they on lend towards the home improvement purpose. We have lent somewhere around 230 million USD. And what we have seen in the portfolio, once MFIs gain experience by doing housing microfinance, they have gone to other investors and they have been able to raise more capital. So we have seen a leverage of almost 5 times the capital that we deployed. So we see, there is an emerging asset class within the microfinance community. And it also is beneficial for them because it's a portfolio diversification strategy where they want to act as a one-stop solution for a low-income family. But despite the progress, the gap between the demand and supply of such products is huge. And we want to maintain this product as an asset class. So we try to work with Asian Development Bank, which is, a very well-known DFI within the Asian context. And they are very active in the microfinance space. So we try to nudge them towards, to see the business and the social impact opportunity within this housing microfinance. So they set aside around 30 million USD facility within their overall lending capacity of 300 million USD somewhere. So the facility, the way it works is that they provide guarantees to the local commercial banks. And then these local commercial banks are providing wholesale facility to MFIs. So we are doing a system change here. And we also come in as a TA partner, right? Where we help the MFIs develop the client-centric solutions. So this is how, the goal has been to unlock the capital within the sector.
It's fascinating, Jiten. I'm going to ask a related question of all of you. I hope is going to elicit some smiles and passion here. Jiten talked about Asian Development Bank financing. Shaheen, your project is largely funded by the IFC, although I know BRAC Bank is also helping fund it. Dana, your model at CHC relies on, government subsidies, but also private capital. As we talk about, all three of you have talked about the role of blended financing for this type of project, right? Government, private, private equity, debt. What do you think? What are the things that, as we look at these blended finance models, what are the biggest pain points sometimes in pulling down funds, things that you wish investors would think about as they think about affordable housing as, in Jiten's words, an asset class, right? What are the things that they need to know about, maybe time horizon, terms, or other areas? And I will open it up to whoever wants to jump in on that question.
I'll jump in first, if I may. It's really interesting when you look at the affordable housing landscape in terms of bringing in really flexible capital, particularly long-term investors. I think it's important that you approach this space with the mindset of having a much longer tenor than you might typically have on other investments, simply because of the time required to really conceive and bring these deals to life. Oftentimes in these deals, you're really trying to streamline the process as much as you can in terms of the cost to develop, so that not all of that cost you're able to pass on to the end consumer, right? And so it takes a lot of time to pull together the entire capital stack to really help bring those costs down. So as an example, if you're looking at the average cost now to build a 3-bedroom, 2-bath kind of home unit in the US, you may be looking at somewhere around $300,000 all in. Well, that's just the cost to build. And if you look at what those individuals can typically afford, it's far less than that $300,000 cost to construct, right? And so you've got to put together a collection of gap resources, grants, down payment assistance dollars, and favorable mortgage terms to allow those individuals to acquire that home. So if you think about the whole continuum of that process, it's a very lengthy one. And so having patience in this space is really the most important thing that we could ask for long-term investors. And then lastly, in terms of the patience, it requires long-term capital. Most of the capital that you see in this space are looking at the interim type structures from 2 to 3 years. We need something significantly longer than that so that those individuals can withstand the marketplace itself and then allow those deals to stabilize so they can really afford those units.
Thank you, Dana. Anyone else have opinions on this question?
Sure, Elizabeth, I can go next. I think as a second point, I'll continue with what Dana said. I think we need to basically promote housing as a gateway, that leads to various socioeconomic opportunities for families.
Yeah.
Right. We have seen that, their housing has various outcomes which lead to the overall well-being for a family. We have done numerous impact assessment studies, and we see a direct linkage between housing and the economic resiliency, between housing and the health and well-being, and also the education. Yeah. So I think promoting from that lens is very important. And I think continuing Dana's point around the mismatch in the capital, now, even if you look at Mr. Shaheen's example, we are also working with affordable housing finance companies. Their average loan is somewhere between 10 to 15 years. And the best possible capital terms that they are able to mobilize is of 5 years, right? So there is still an asset liability mismatch. So having that long-term view around the capital and making sure that, investors also have the right financial solutions available to safeguard their interests, such as having access to the derivatives, which can minimize the currency exchange risk and all. I think so that would really lead to the long-term deployment of the capital. And there is a need of, changing the mental models of investors here, where housing, is seen from the lens of gender empowerment, seen from the lens of climate mitigation and adaptation, and also the overall, well-being for a family.
I love that, Jiten. The last week was the UNGA here in New York. A lot of discussion around the Sustainable Development Goals and the lack of progress there. And it sounds like from what I'm hearing, there's so much opportunity to investing in affordable housing at the intersection of many other economic challenges, many of the other SDG goals, in order to hit on multiple areas at once. And so I really appreciate your bringing into the conversation this idea of intersectionality between housing, affordability, and other issues. Shaheen, did you have anything to add on, how would we, how do we want to help investors or people funding this space think differently about the types of dollars available?
Yeah, thank you. I think let me take the cue from the earlier speaker. So one interesting part from blended financing is in many cases, so the commercial funding that is available from the bank's own source doesn't make it feasible for the borrower. So you need to bring in some subsidy component here so that the cost or the income level that the borrower has, it really commensurate with the monthly payment that they have to make. So that's why you need to make it commensurate with the demand and supply. So that's where the subsidy part comes into play. And the second part that the earlier speaker mentioned, say the tenor still, say against a 20-year financing, you have access to 5 years. So we are hoping that after 5 years, probably we do have alternative source, or we will be able to manage those. So this kind of financing window needs to open up, and a lot of capital needs to flow through. And another benefit that we really have to achieve is in a country like Bangladesh, we have 170 million people, and we have a 55 1,000 square kilometers of space. So you can see one of the most densely, in fact, the most densely populated country in the world. So we have a significant pressure on urbanization. You need to keep people in the rural areas as well to really make it livable. So that's how we really need to finance those who really wants to stay there, and some kind of financing proposition is to be available here. Otherwise, it is not going to be manageable. At the same time, we're already one of the most vulnerable countries in the world in terms of climate. So climate impact. So all this together, like we really need to focus on these things to really make the SDG workable and also make it a sustainable place to live on. Otherwise, things will really break apart.
Yeah, thank you. Thank you, Shaheen, and thank you for bringing up again, the intersection, the correlation with climate and climate change. We know that globally, worldwide, the people most affected by social and economic issues will also be very highly affected by climate change. And so the challenges that we see today may only be worsening as we think about some of these segments of the population we're trying to reach. As our time comes to a close, I'm going to ask one final question of the panel. It's a shame I could talk to you all day about these challenges and solutions. And I wanted to just, for the audience, pull together some of the threads that we were talking about today between the intersection of affordable housing and financial inclusion. You know, Shaheen talked about that huge opportunity working at the intersection of SME finance and affordable housing, and really thinking about holistic financial services for the SME segment across Bangladesh in ways that I think that are absolutely replicable across many markets, many countries in the world. Jiten talked about so passionately and clearly about affordable housing as an asset class, really thinking about what does it take to create this, build and bolster this space, and think creatively about terms and commitments. And Dina, I loved how you opened with talking about the wraparound services of financial education, health, healthcare, childcare with affordable housing programs that we've seen in the US here. My final question to this audience, or to this panel, thinking about our audience, folks who are working in, you know, investment capital, in banking, in microfinance, what is the one thing that you'd like this audience to do differently as you consider, as they consider affordable housing as a component of their financial inclusion strategy? What would you challenge people to do who are working squarely in financial inclusion work? Jiten, I'll start with you and then go to Shaheen and then Dina.
I think so, Elizabeth. I think the way the financial ecosystem has evolved, I think it gives immense opportunities to look for the new business models and the new solutions. Like if you look at the financial inclusion sector, it composes of financial market infrastructure, financial providers, right? And also the demand side segment, which eventually uses those services. Now, one example which I want to bring, and this is again happening in Indonesia currently, a commercial bank is partnering with a tech platform provider, and using the data which is generated in the broader financial inclusion sector around the payment systems, they are able to underwrite micro mortgages for these platform workers, right? The model is still at the prototyping stage, but the opportunity that this financial ecosystem and the financial inclusion sector in general is providing is to look, you know, beyond your normal offerings that you do, and to look for partnerships where every provider, which has their own strength, they come together and provide a unique solution, right? So here you are offering micro mortgages to that segment, which is never able to access mortgages from the mainstream banking sector. So, you know, you are really deepening the financial inclusion within this whole ecosystem. So I think I would really urge the stakeholders to look into that direction and look for new opportunities and the business model and expand the horizon of housing finance.
I love that. Looking at new partners, last mile solutions, and tech to really expand the opportunity and reach while thinking about affordable housing products to do that. Fantastic. Shaheen.
Okay, thank you. I think we have discussed all like how important it is. I think few perspective could really add. Yeah, like one is now we're seeing this as a global challenge, like wealth concentration, and I think this is a wonderful way to really provide the underserved segment to really graduate to the next level, so that they have some wealth creating by themselves, and probably their family members or probably their children and their grandchildren probably can have a better life. That's one way. And also, like, whenever you are providing this support, these are in our case like mostly outside the metros. That's how you are supporting sustainable living as well, because the metros are heavily burdened with concentration, overpopulation, and the environmental degradation. So we are going to have a sustainable living as well. So we, for both this case, like wealth concentration, sustainable living, and also graduating the underserved segment, I think we really need to ensure financing this segment, and whoever is working with this one, like we have to pull this fund together to really support this segment. I think that's a wonderful way to live a better life going forward. Thank you.
Such important points, Shaheen, and I love the connection with addressing generational poverty as well through affordable housing. It's such an important point there. Dana, what would be the one challenge that you have for investors and others in this space?
Yeah, I mean, I really think it's twofold for us here in the States and the US. You know, in every industry, there are billions of dollars that are provided for product development every single year, be it pharmaceuticals, IT, or other sectors. We don't have those type of investments made within this space, right? And so if we completely threw out the model that's being used today, make some real investments into developing a model or product that could really be impactful within the space, leaving no things to chance. Let's just try everything, right? Because we have all these models and tools that we tried to date, and we still have substantial gaps in affordable housing. If we have an opportunity to really be creative and develop a product that's not looking for any potential return on investment or to sell, but we can simply develop a product that could be deployed throughout the country and the world, actually, if we take our time to invest the right kind of dollars and get to real solutions. We haven't really done that in the affordable housing space, right? Let's take some time as a collective group to find solutions and make the investments that we need on the front end so that we understand where the pain points are and where some of the largest demand factors might be within this sector. I think we have a really good sense of what the shortages are, but some of the bigger gaps are constantly facing the access to flexible capital that can be deployed easily within the space, and then finding means to develop products, housing within the industry that really provides a streamlined process to bring the cost down, right? There's a sector within the space that's a labor and commodity. When those things collide and the costs exceed more than what folks can really afford to have, we've got to spend more time to determine how we best affect that space. More investments on product development and inventions, I think, would be a great way for this space to go into.
Thank you, Dana. What a compelling call to action there to really think dramatically differently about what we're doing in this space. And I think my panelists today, I know that we can all agree that this is one of those areas that is under-discussed, under-explored, and potentially under-innovated in, and we'd love to see that more. So thank you all for your time and your energy and the work that you do day in and day out in affordable housing finance. Thank you to our audience as well for listening today. please do engage with us. Look us up afterwards and reach out if you've got ideas or questions or other models or potential partnerships for our organizations. We really appreciate your time today and have a great rest of your day. Bye-bye.
Thank you.